Hi everyone, hope you're all doing well. Today I've got an exciting video for you guys because I don't normally make short-term predictions. You guys know me. I invest for the long term. I invest for 5 years, but every so often everyone kind of goes, if you were to pick a stock that was to do very well this year, which stock would it be? And I believe it could be this one. I think that this stock does have a 2x potential this year in it. Now, like I said, anything can happen in the short term, and I am normally invested for the long term, and I am investing this for the long term prospect. But if you were forcing me to pick a stock that I own at the moment that could 2x, it should, or it could be this one, because the financials it's going to do this year look exceptional. And if it doesn't 2x this year, this stock is going to look incredibly cheap. So I hope you enjoyed the video, and let's get started. So this stock is PDD Holdings, or Pinduoduo. Now it is a Chinese stock, and I know that might put a few people off it, but if you can see past that, then you are going to get excited about this stock. Now actually, last year it had a pretty good year. The stock was actually up around 52% last year, but I think this year could duplicate that once again, or even go higher than that at the moment. Now what you'll notice about this is it is listed on the Nasdaq under PDD. Now PDD Holdings has been around for a while, but it has recently created a new product that is driving up financials insane, and that is Temu. They have created Temu, and I'm sure you have heard of this. It is an online marketplace that was originally operating in China. It has now expanded around the world, and it has become a household name in under a year. This launched a year ago, and it's now a household name. And if you've ever been on Temu, they sell a lot of products like clothing, but also if you go onto categories, for example, they also sell toys, fitness products, accessories for around the house, haircare. They sell loads of products. So compared to someone like a Shein, for example, which we have seen the success that Shein have had in the last few years, and mostly that's been through clothing. With Temu, you're kind of getting the clothing side of it now, but you're getting all the other sides of the business as well. It's basically coming Amazon at cheaper rates, and we've seen a lot of sellers at the moment rushing to sell on Temu. They are going to look at opening up their product so the likes of UK sellers can also sell through Temu, and also from the US point of view, US sellers can sell through Temu as well. So this is probably the biggest threat to what Amazon have had in the last few years, and if they can become a really good price competitive site for an Amazon, it looks very exciting where this business can go. And like I said, these guys have basically come out of nowhere when you look at them. They only launched in the UK around about a year ago. They are already the #1 app in the UK and have been the #1 app for many months now. They then decided to launch into the US, and once again, they've been the #1 app in the US for a very long time now. And they're also expanding into Latin America, the whole of Europe and Africa. And if you go look at someone like Mexico, for example, Temu is #2 in there as well right now, which is absolutely crazy. Above the likes of TikTok, for example, Google, Instagram, Facebook, WhatsApp, Shein, Mercado Libre, which is absolutely crazy. Now, when you look at Pinduoduo, if you look at their financials that are coming up, this is where it gets really exciting, where the business could potentially go. Now, if you look at the last set of numbers they did, this was on November the 28th, and in 9 days' time, we are going to get PDD's new update for Q4, and I think it's going to be exceptional. So this is why it's very important to have a look at this very soon. So if you look at the last set of earnings they did on November the 28th, the stock actually went, you can see just about the jump there, it went from $117 up to $141 on its last set of earnings. Now it went all the way up there, and it kind of peaked down there and kind of filled the gap a little bit, but now it's actually gone to $110. So that's correct. Since its last earnings, there was a massive jump in the share price, and now the share price has actually gone lower than where it was before the last set of earnings. So that's a very good sign that it's set up to have a nice beat on earnings and have a good share price jump. And when you look at the last earnings, look at these numbers. The EPS beat by 0.39. That was a 20% beat on the EPS. Now, what a lot of the market isn't working out already as well is that if they carry on beating the EPS by this much, this business is already trading at a 19 times forward earnings. I think Yahoo Finance actually has it down as 14 times forward earnings. Obviously, that's a decent valuation, but obviously, if they're beating profitability more and more, obviously the valuation is going to drop more and more as well, by the way, which is worth pointing out. But on a revenue point of view, they grew at 94%. They beat their revenue expectations by 2 billion. How crazy is that? You call that Nvidia? That's a 10x stock. That's absolutely insane beat from PDD Holdings. So these are insane beats, and yet the company's trading in the teen range on a forward basis. Now, if you look at the next quarter's earnings, they're expecting the EPS once again to go from $1.19 to $1.06, and 94% sales growth as well in this quarter. And I think they'll beat it as well, because obviously Q4, what do we know? Big spending period. And also next quarter as well, up 116% growth, obviously with the holiday season, and also well, a bit of the holiday season, but also China as well, big Chinese holidays as well going on over there. And overall, that'll lead to the business growing 80% and the EPS nearly doubling as well. Now, 2024, there's going to be a big hike up in guidance, I believe. So we're going to see a good jump in the EPS, but also look at the growth, 41%. Now, you've got to realise the amount of countries that they have just launched in the last couple of months. This is going to lead to the growth going up rapidly. So I think we are going to see, more than likely, this going to be a lot higher than 41%, and also the EPS going up a lot more than what the analysts are expecting. And also, that will mean it's going to be a cheaper valuation, considering already that the stock is already trading at 14 times forward earnings. Now, I know the big thing that everyone argues with this is that it's a Chinese business, and you might want to put a lower multiple on it. But let's be a bit realistic here. If a business this year is going to grow, I think more than 41%, but let's say 41%, and the EPS does go up this much, I think it'll be even more than this much. But let's just say it's this for argument's sake. If they are doing these numbers and the EPS is going up this much, nearly 50% improvement in the EPS, the sales growth is going to be 41%. Do you think the stock is going to be these levels in a year's time? I don't think so. I think it's definitely going to be a lot higher. And let's be realistically, if it's going to be at 14 times earnings doing these financials, these are absolutely crazy, because you'd normally associate the financials of these with a premium market valuation. So even if we go to 30 times earnings, it's going to be nearly double what it already is when it closes its EPS off this year, which is incredible. And overall, I mean, you look at the forecast of the business, the growth is going to be absolutely insane. The profit growth is going to be insane. And also, you know, the company is throwing off serious amounts of profitability. This is more profitability than the likes of like a JD.com, for example. You're going to be throwing off that much profitability. It's actually going to open the doors about what they actually do. You know, they have choices if they wanted to go to a dividend, if they wanted to go to a share buyback as well. And that's also led to a balance sheet point of view. You know, when you look at the balance sheet point of view here, the company sits around 9% debt to equity, which if they wanted to, they could obviously pay that off now. But also there's going to be this company with an amazing cash balance as well they're going to be generating, which is absolutely crazy. So quite often, you know me, I like to invest for the long term, and I am investing in this for the long term. And I think that when you look at the success that Shein has, and now you have a business like Temu that isn't just that clothing business, it's going to sell everything. It's a serious competition to the likes of Amazon. And you look at the growth and the drive of valuation that Shein has had in the last few years, and Temu is only 1 year in, and the potential TAM that it's going to be in, because it sells more than just clothing, it's going to be even more incredible than Shein. It looks a great opportunity, and yet you're picking this up with these growth numbers at 14 times forward earnings. I mean, I know some people don't like touching Chinese stocks, but you've got to look at that and look at the growth and look at these numbers going, it does look a cracking opportunity. So yeah, I think at the moment, I think that when we do get the next set of earnings from these guys, which I think is in 9 days time, like I said, the share price has already dropped lower than where it was when they reported the last set of mega earnings. The last one where they beat the EPS by 20% and the revenue beat by I can't believe that. They beat by 2 billion on a 9 billion revenue. Like, the last time this happened, the stock really popped off, and since then the shares have actually gone lower than where it were when they reported last earnings. I mean, I'm looking forward to these guys reporting earnings on that in the next 9 days time anyway, but it definitely looks like an interesting opportunity to be watching anyway, guys. So thought I'd point that one out for you, especially because on Friday the stock had a pretty ugly day where it was down nearly 6%. So yeah, interesting one. We'll come back to this in a couple of days' time, and I'm sure we'll be talking about their earnings and seeing if they have another 2 billion beat in revenue on them again. So yeah, thought I'd point that one out for you guys. Hope you enjoyed it, guys. See you in a bit.